At the end of 2023, with inflation easing, the Federal Reserve hinted that it would start cutting interest rates in 2024. Now, projections from the Fed's December meeting forecast the federal funds rate to fall to 4.6%. And that's down from the current rate of 5.25 to 5.5%. What's in store for us next? Let's find out. The Fed's actions and comments prompted a drop in the mortgage rates in the latter part of 2023, and that has continued into 2024. And there could be room for more mortgage easing as we get deeper into this year. How far are those mortgage rates going to go in 2024? Well, let's look at the data and find out.
I'm Kiwi of the coast, the agent with the most.
Over the past few months, mortgage experts have predicted that the mortgage rates are going to drop in 2024. Now, mortgage rates actually got a head start dropping in 2023. And that was with rates falling after the December 23 Fed meeting. Mortgage rates are already in a better place than they were last year, with the average mortgage rate 30-year fixed at around 6.5%. And that's welcome news, because remember when in October those rates were hovering right at 8%. Now, to some, this movement means there's not much more room that these mortgage rates can fall this year, 2024. But is that true? If mortgage rates do continue to fall in 2024, as many predict, is really going to be dependent on what the Fed does next. While mortgage rates already took a decline based on the Fed's stance in December, it is also likely with further easing that those mortgage rates are going to come down even more. Actual rate cuts could lead to additional mortgage rate declines, and that's got to be good news. Some experts are predicting that the Fed in the first half of 2024 will make 3.25 or quarter point cuts in the federal funds rate, with mortgage rates following those decreases. Others think mortgage rates will take longer to come down, with rates falling later towards the end of 2024, and even if rates drop in 2024, it may not be a smooth downward slope. In addition to looking to see where the Feds are going to head next, the experts are also saying we need to look at the economic and financial indicators to try and get a better sense of where those rates are heading. And of course, those indicators also inform the Fed's decisions. I'm watching economic data, which includes consumer spending, GDP growth, and inflation. If these numbers fall, meaning the economy is slowing, then the Fed's going to take action, aren't they? They're going to start reducing those rates. However, if the GDP has strong numbers, inflation heads in the wrong direction, then we're going to see the Fed likely start and raise rates, or at least not drop them at all. When the economy is in great shape, we know that mortgage rates tend to be higher. The bond market also holds clues to what's happening with mortgage rates, because mortgage rates are closely tied to those bond yields. And they've all been pretty unstable as of late. If they finally become more steady, then we should see those mortgage rates start to drop. So keep an eye on those. Real estate data also holds a lot of clues. While there are multiple factors affecting housing starts, when builders build, that's an expectation that those mortgage rates are going to drop. They build to the market where they know they're going to have buyers coming in, and buyers are attracted to lower interest rates. Demand for new mortgages also very telling. We've got a rate lock situation here at the moment where a lot of sellers who would be buyers are hanging on and not wanting to sell and then purchase because they don't want to give up those very low interest rates. We've got a lot of buyers that have been sitting on the sidelines. Rates go down slightly, those sellers become buyers and they jump into the market. And the delta between the mortgage rate they're giving up and the mortgage rate they're going to is a lot less. So we could see a lot more inventory coming to the market as well. Lots of factors out there. Some home buyers might prefer the certainty of buying a home now, especially if those interest rates have come down and they've been sitting for a while. Rather than waiting to see what happens to mortgage rates in the future, that can be a bit of a gamble. And of course, mortgage rates is tied into pricing. So a lot of those buyers may want the certainty of buying now rather than waiting for potentially higher prices as mortgage rates ease, if in fact they do. If you're comfortable with your current situation, which many sellers are who are going to be buyers, then you wait it out and see what's going to happen with those mortgage rates. But you don't want to wait too long, because as soon as they tick down a little more, we're going to see a lot more inventory and we could see some price easing. So sellers out there, maybe you better get your home on the market now and jump in and get those better prices while they still exist as a carryover from those pandemic days. The real estate market is constantly changing. Click on the video that's on your screen right now so that I can keep you up to date with housing inventory, mortgage rates, all of those factors affecting you and the real estate market. See you on that next video. The Room.